IRA and 401k basics, non-recourse loans, UBIT and the impact on your compound interest, and why an IRA just might not be right for you. This and more, starting now. We've talked a lot about compound interest producing non-traditional investments. You remember what they are? What if you go to make a non-traditional investment into a REIT or a rental property and your self-directed retirement account doesn't have enough in it? What do? Are you even able to follow through with an investment like that? Quick example. You have $100,000 in your self-directed IRA, and this is in traditional dollars. Your objective is to start growing Roth profit. So how do you go about it? How do you start growing Roth profit? Well, you have to first convert traditional dollars into Roth. And remember, that's just a decision. And remember, Roth profit is just another way of saying tax-free profit. You have a choice. You have a choice to convert all of your traditional dollars over to Roth, or you can convert a portion of your traditional dollars to Roth. In this example, we're going to convert 50,000 of our 100,000 to Roth dollars. And why are we doing that? Because the tax implications hurt less. Meaning, in order to convert traditional dollars to Roth, you have to pay taxes on the amount that you convert. 50,000 is easier for us to pay than to pay taxes on the full 100. So in this example, we're converting half of our traditional dollars to Roth. If you are unsure as to how to convert traditional dollars over to Roth, please go back and take a look at my earlier videos to walk through how. So okay, we've got 50,000 in Roth dollars. Now we want to invest it to grow us some Roth profit. So you've come across this rental property on the market for 90,000. Based off our assessment, it's going to take about $10,000 to get this property ready to sell. And in addition, the property appraises right around 150,000. So let's step through this. I've got 50,000 in Roth dollars. This property costs 90. I want to put 10,000 into it and eventually sell this property for 150 and in turn making about 50,000 in Roth profit. Not too bad, but there's a problem. I only have $50,000 to apply. And I know in my original account, I do have 100, but I don't want to use that. My objective here is to grow Roth profit. I've got $50,000 in my self-directed Roth IRA, and I want to use this specific dollar amount to invest in this property. Well, did you know your retirement account is allowed to borrow? And I don't want to confuse you. I get it. Your retirement account is not a person, but your retirement account is allowed to borrow. It's allowed to leverage funds from other places. So the good part is, this means that your retirement account is not limited to the amount that's in it. Your account is allowed to borrow in the form of a non-recourse loan. Okay, so what's a non-recourse loan? I'll explain. But in order to explain a non-recourse loan, I want to step back for a moment. Today, when you go to a bank to borrow money, what happens? Well, they run your credit, right? You got to fill out all this paperwork, and they do or they don't approve you, and you got to fill out all of this and sign all of these documents with your signature and your social security number. And then they provide you with a loan, right? Well, what does your signature and your social on that application do? Well, if for any reason you were to default on that loan, the bank has a recourse. What's the bank's recourse? The bank's recourse is to come after you because you signed your name and your social and said, hey, if I don't follow through on our agreement, you have every right to come after me. So the bank's recourse is to come after you because you gave them your guarantee by signing this document. Well, if you remember, when I walked through the differences between IRAs and 401ks and some of the rules, there were two rules that you always have to keep in mind. One being prohibited transactions. There are some things that you cannot invest in using your retirement account. The other is disqualified persons. Do you remember who the disqualified persons are? Well, do you remember who the number one disqualified person is? The number one disqualified person is you as the owner of the retirement account. So if I'm going to use my self-directed Roth IRA to invest in this property, I cannot be involved in that property, even though I am acting on behalf of my retirement account. And I know it gets confusing, but follow me. If your retirement account is short on money and that bank is going to loan money to your retirement account, they are loaning that money to your retirement account based off the strength of the opportunity. They cannot run a credit check on you. It doesn't matter what your DTI is. It doesn't matter if you have any other purchase transaction problems. It doesn't matter how much you have in savings. When your retirement account is going to get a loan from a bank, they are lending to your retirement account based off the strength of the opportunity. What is the property appraised for? What's the ARV? What's their LTV? Your personal information plays no role in acquiring this loan for your retirement account. Does that make sense? And if that's the case, then what do? The bank will loan money to your retirement account based off the strength of the opportunity. Whoever the lender is cannot ask for your personal guarantee. The lender will take the property as collateral and therefore there is no personal recourse. When it's time to sign documents, then what? And if you can't use your social security number, who actually signs these documents? Well, what you have to remember is you wear multiple hats in this situation. And in this case, one of those hats is as trustee and/or manager of your retirement account, meaning you're the sole decision maker. You decide what does or doesn't happen. And therefore, when it comes time to sign, you have the ability to apply your signature, but you're applying your signature as trustee. You're applying your signature as manager, whatever the case may be. And so therefore you are acting on behalf of your retirement account. In this case, it's a self-directed Roth IRA. What does self-directed mean? Self-directed means you have control. Self-directed means you make all of the decisions. So you have to sign, but you're signing on behalf of your retirement account. Does that make sense? And if you think this is confusing to you, this can get quite confusing to banks who have never dealt with a self-directed retirement account before in a transaction like this. But trust me, this is exactly how it's done. See, commercial non-recourse loans usually have a loan-to-value ratio of anywhere between 55 and 75%. And note, private loans, meaning loans that you're not necessarily getting from some type of FDIC-insured institution, private loans that you may be getting from a business partner, have no LTV limits. And lastly, any non-disqualified person can be a non-recourse lender. I'm saying that slow because I want to make sure you understand what I mean. Any non-disqualified person can be a non-recourse lender. So let's jump back into this example. Okay, so we get this $50,000 non-recourse loan from the bank, and you pair that with my self-directed Roth IRA that has $50,000 in it. I now have the $100,000 I need to buy this property. So I purchase it for $90,000. I apply $10,000 to it, it's ready to go. But you know what? I changed my mind. Instead of selling it, I want to rent it out. I want to collect some residual income for a little bit. So I rent the property out and I'm collecting $1,000 a month in rent. That's $1,000 a month in Roth profit going back into my self-directed Roth IRA. And I collect this rent for the next 2 years. $1,000 a month over 2 years, that's $24,000 in Roth profit. What do I mean by Roth profit? That's $24,000 tax-free once I meet all of the criteria. So my $50,000 that I had originally invested has made me $24,000 in Roth profit in 2 years. After those 2 years, I decide to sell. Put the property on the market for $150,000. It immediately sells. You know why? Because I've got renters in it. It's cash flowing. So it immediately sells for $150,000. I pay the bank back. And the interest that I owe the bank, I pay out of my rents. So my $50,000 self-directed Roth IRA just made $50,000 in Roth profit once I pay the bank back their $50,000. And again, Roth profit, tax-free, forever. Guess what happens? There's this tax that comes along. Because I've leveraged, meaning because I've borrowed money using my retirement dollars, there's this tax that comes along called UBIT, Unrelated Business Income Tax. UBIT comes along and taxes my profits, as well as my 2 years of rent. It puts a tax on my profits in the 2 years of rent based off the percentage of the leverage that I used. So let me rewind that a little bit. I had $50,000. I got a $50,000 loan, got a property for $100,000. So I borrowed 50% of the purchase price from the bank. UBIT comes along and taxes 50% of my profits because I used 50% of the purchase from a loan from the bank. Does that make sense? UBIT comes along and taxes the profits and the 2 years of rents based off the percentage of leverage that I used to purchase the property. Now, what does that mean in English? 50% of the $100,000 that was used to purchase that property came from the bank. So therefore, the IRS comes along and taxes 50% of my profits and 50% of my net rents at a percentage rate of up to 37%. Now, hopefully it won't be 37%, but the truth is I don't know.
IRAs can lower your ability to fund investments, grow your retirement, and decrease taxable income. Please consult your self-directed investment strategist if you've ever had or are at risk for any of the following: self-employed income, disqualified persons, actually making money with your retirement account, UBIT, anxiety around not knowing if you'll have enough to retire. IRAs require a custodian and are subject to rules you may or may not approve of. Tell your consultant if you foresee a large investment, as making too much money can become a serious taxable symptom with an IRA. Being limited on maximal annual contributions to IRAs may sometimes cause the following side effects: frustration, night sweats, and serious mood swings. Don't create an IRA if you have an allergic reaction to paying more in taxes.
And remember, this is regardless of whether or not we're talking about Roth or traditional dollars. Even though my profits are growing tax-free because I'm using Roth, does not exclude me from UBIT in a self-directed Roth IRA. In a self-directed Roth IRA, I'm exempt from capital gains. I'm exempt from income tax, but I am not exempt from UBIT. So, okay, You've paid this tax. But you want to know a little something? You know, the easiest way to not be impacted by the unrelated business income tax would be if you were to do this exact same transaction using a self-directed 401k. And that's whether it's Roth or traditional, doesn't matter. UBIT does not apply to leveraged real estate transaction inside of a 401k. So in other words, having a 401k is like getting a 37% increase in your profits. So when wondering if an IRA is right for you, please consult your self-directed strategist. And of course, that would be me. We can review your personal situation to make sure you're making the best decision for you and your financial future. And also remember, this is a great win here. Your retirement account is not limited to the amount of dollars that's in it. Using leverage in the form of a non-recourse loan unlocks infinite doors for you and your investment opportunities. And what's UBIT? Well, we won't get into UBIT here. So join me in my next video. The same way we address non-recourse loan, I will address UBIT and break it down in a very similar fashion. The moral of the story here is you may only have $10,000 or less in your retirement account. Don't be discouraged. If you see an opportunity to grow your retirement dollars but lack all of the funds to make it happen, your self-directed retirement account, whether that's an IRA or 401k with traditional or Roth dollars in it, has the ability to borrow. It has the ability to leverage funds to make that deal happen. And therefore, it allows you to generate compound interest and grow your retirement account exponentially fast, even though you don't have much in it. So please let this be encouraging for those of you who may not have much in your retirement account, because it's not about the money that you have. It's about investing in the right vehicle. It's about preparing yourself for acquiring the right knowledge, and most importantly, taking action, which requires you to be the right you. Okay, so what do I mean? I can give my knowledge away all day. I can share with you opportunities that will bring you an abundance of growth and compound interest. But if you haven't done the necessary work and prepared yourself to receive this information, it's going to be impossible to achieve the right results. Pick that up from my mentor, Jeff Fagan. It's simple math. The right vehicle plus the right knowledge plus the right you will produce the right results. But I think you need a visual of this because they aren't all equal. The most important piece in this equation is the right you. Without the right you, these other variables don't matter. So join me in my next video where I will break down UBIT. What is it? Where did it come from? And how do you avoid it? I'm Donnell with Self-Directed Strategies. Don't forget to like and subscribe and share this content as we continue our quest for exponential growth of compound interest. So till next time.